Over the last few years, we've faced many risks of varying nature, from COVID-19 to supply chain disruptions, trade wars to Chinese regulatory risks, the Russia-Ukraine war to higher food and energy prices, as well as a higher inflationary environment. In the current precarious geopolitical landscape, risks are hidden, and as an investor, we must be ready not just for the known unknowns, but also the unknown unknowns. Here, I'd like to focus on two key attributes which help us navigate these environments and keeps our focus on long-term value creation. The first is Foord's multi-councellor approach, which involves dividing the assets of each portfolio among a number of portfolio managers. Each portfolio manager is very different to the other and has a unique expertise and style to add value to the fund. Their exposures to various sectors, geographies, and risk factors vary, giving us a very balanced portfolio at the group level. This is important, especially in the current environment when risks are everywhere in different forms. The second is portfolio construction, which is probably one of our most important risk management tools. When we approach portfolio construction, the focus is not to diversify through an increasing number of names, but through the economic factors or themes, ideally with limited correlation among them. Even at the sector level, we seek to diversify. Let's consider a few examples. The growth of the Chinese middle-class consumer is a structural theme that should compound value for years to come. We have exposure to many companies that should benefit from various diverse subsegments within this theme, from JD.com and Alibaba in e-commerce and cloud, to Tencent in social media and Trip.com in travel, to name a few. A very different thematic exposure would be healthcare, which is also less correlated with the economic cycle. If someone is sick, the person needs to be treated. So healthcare provides a good hedge against economically sensitive sectors and serves as a source of uncorrelated returns for the portfolio. Within healthcare, we like to focus on the most innovative businesses, which provides an added quality overlay to our stock selection. Food scarcity is another area that provides investors with further diversification, where we own several high-quality businesses, including Nutrien. Given the rise in population levels with scarce arable land, fertilizers, seed, and crop protection technologies are very much needed to increase food yields. The global fertilizer market is a tightly controlled oligopoly, with Nutrien being its largest producer, especially of potash, where two of its biggest producers, Belarus and Russia, are now facing sanctions. Nutrien also operates the largest ag-retail network for farmers, supplying them with equipment, seed, chemicals, and tools that enhance food yields, which provides investors with a nice idiosyncratic earnings exposure for the long term. We have similar exposures in energy and are overweight all sectors mentioned, including materials, healthcare, and consumer discretionary. There are many themes within our portfolio, each working under different environments, helping us remain solvent for long enough to realize gains. We are continuously striving to construct an all-weather portfolio to generate the best risk-adjusted returns for the long term.